Hey guys, welcome back to another video by Fully Informed Trade, and this is the Spider Gold Trust, or the GLD. Basically, it is a gold tracking ETF, which is basically a mutual fund that follows gold, except it's not really actively managed. But what's going on is that the GLD is having a pretty hard time holding on, but right now what's keeping the GLD intact somewhat is the fact that things are becoming a little confusing in Europe. The only problem, though, is that people aren't trading the gold or treating gold as if it is a third currency. And I think it's because of the fact that people are losing money in gold right now. It went all the way up to around 185 on the GLD, and right now it's sitting at around 152, which basically means that people have lost around 20% of the money if they bought near the top. And always remember, guys, people buy the most at the peak of euphoria, and when they start selling, the vast majority of the people are losing at that point in time. Now, here's what I see with gold. You know, I believe a lot of mints. I think it was the Federal Mint or something like that. But they basically said demand for gold and I think gold and silver both fell, and that means that basically physical gold and copper gold and silver does not have as much demand. And right now, what happened here is that, again, I'm just going to zoom in real quick. We just had a double bottom right here on the gold chart, right there, double bottom right there. So if you guys notice right here, the double bottom. Okay, again, if I can get it onto the screen properly. No, I can't. But yeah, there we go. Maybe this is a little better. But right here, you got a double bottom right here where the hand's grabbing, right there. And that's basically what's going on. You guys got this area. It is bounced off of that, but it could continue to roll over into a longer-term downtrend. Remember, the volume is still a little elevated, and the trend is still in a downward trend. So I really wouldn't hold my breath here. Again, the main way people protect their investment, or the best way people can possibly protect their money from loss, is not necessarily gold, because gold is still a speculative instrument, whereas the bond market, okay, the U.S. Treasury bond is considered safe. Okay, it's the least volatile asset. So what happens is that I think gold is being put to the side, and people are allocating capital towards the bond market. And the issue with gold is that gold isn't seen as a low-risk asset, whereas the bond market is. Generally speaking, and this is according to FINRA, FINRA does not want people recommending gold to be a safe asset. Which, again, it sounds like some sort of conspiracy theory here, but the point is that gold hasn't proven itself to be a non-volatile investment, and therefore people aren't putting their clients' money into gold as much as they used to be. It's primarily hedge funds, but it's not really the mutual funds. It's not really the funds that are very defensive. And gold is not really considered a cash equivalent. What's considered a cash equivalent is a money market fund and stuff like that. So again, until people reprioritize what gold is into a safer asset, which it kind of isn't. I don't think it is a safe asset. For now, gold is going to be a second, it's a third-rate investment compared to bonds. I mean, not in terms of yield, but in terms of risk. And therefore, in an environment where people are risk-averse, bonds are going to be the #1 thing, and gold and silver are going to be seen as third-rate ways to protect money. That does it for me for today, guys. And if you have any questions, leave a comment right below, and I'll be more than happy to try and answer some of them.